Conway from the Australian Stock Report is joining us live from our Melbourne studio. Chris, good afternoon to you and thank you so much for joining us. Now, a couple of push and pull factors at play there, energy dragging, but healthcare right at the top of the list there today. We are seeing a bit of support coming into financials. What are you making of today's moves?
Good afternoon, Leanne. Look, it's nice to see some green on the screen after 4 out of 5 losing sessions over the past week. So, look, undoubtedly the healthcare space being supported by the profit upgrade for CSL and the huge bump the share price is receiving, circa 10%. Great result for a great company. Energy is, as expected, oil prices down 3% overnight. The big one for me, though, has been the banks. I mean, I think the pullback that we've seen, as I said, 4 out of the last 5 sessions, the market has moved lower. I think most of that would be attributed to the banks that have come back from some quite lofty levels. But they are coming back into support levels, and it'll be interesting to see how they trade from here.
Yeah, absolutely. More broadly, a lot of our guests saying, look, investors are cautious ahead of President-elect Donald Trump's inauguration on Friday. IG, in fact, saying that it feels as though the market's a little lost right now and it's searching for the next big thematic to key off. Do you get the feeling we're in a bit of a holding pattern until that inauguration and maybe earnings season next week?
Yeah, I would think so. I read the same note this morning from Chris Weston from IG and tend to agree with the sentiment. You know, last year was a year that was so dominated and so punctuated by huge thematic or huge themes that impacted the market. And, you know, post the Fed decision in December, we did go into a dry spell. You know, that was the last big macro event for the year and one that was extremely well telegraphed, so wasn't a surprise in any event. From sort of mid-December until everyone started talking about the Theresa May speech and indeed the inauguration this Friday, there haven't been those macro drivers. So I think rightly so, this is the first thing that the market has really sort of clung onto, and that of course is Trump's inauguration. For mine though, I don't think it's going to have a significant or long-lasting impact. I mean, what does anyone really expect Donald Trump to do or to say in this inauguration speech that is going to seriously shift the needle in regard to what he's going to do from a policy perspective? I think if people are expecting that, they will ultimately be disappointed. You know, the real policy work of being a president doesn't begin from the inauguration speech. Surely there are some broad brushstrokes that can be painted, but serious policy making doesn't begin at the inauguration. So, like I said, for those people who are expecting more clarity, I think they will be disappointed. I ultimately think this is an event that the market will simply endure, and then the market will refocus on more important things like the ongoing reporting season in the US and, of course, locally, the reporting season that kicks off in February.
Yeah, I guess it does come down to his team as well that he surrounds himself with, but also important to note that he's taking on a market that's enjoyed pretty solid gains and obviously an economy that has been recovering as well. So I guess, yeah, interesting times right now for the United States. Longer term, Chris, do you see anything on the cards? I mean, maybe Trump aside, but anything on the cards that might derail what seems to remain a bullish uptrend in your view?
No, I don't think so. There's nothing on the immediate horizon. And again, Leanne, you and I speak regularly, and I reiterate that my outlook is always shorter to medium term. Like I said, I think the Trump inauguration is something that the market endures. It will be very happy to be put in the rear view. And then we get back to the business of evaluating companies both in the US and locally. So in the US at the moment, obviously, you know, we had some big banks report last Friday. We had Goldman Sachs overnight, which, despite some very lofty expectations, beat even those expectations. So the banks in America are doing particularly well. I don't have any analysis or detail on how the rest of the US reporting season has been faring, but indeed the banks are doing well, which is a good sign for the economy. So the focus will shift back to that. And then, you know, as I said, it comes back to reporting season locally, which kicks off in February. The great thing, and I think I said this last week, but I'll reiterate it, the great thing about reporting season is it eliminates all the noise. You know, it comes back to how have the companies that we have the opportunity to invest in that comprise the index, how have they been performing? Have they underperformed? Have they outperformed? What are their outlooks? It discounts all the noise, it discounts all the speculation, and it will give us a very, very clear and solid picture of corporate America, as we're currently going through at the moment, and corporate Australia. And I think it's from that platform, provided of course the numbers aren't terrible, that we can, launch the next assault on higher prices from an index perspective.
Yeah, sure. Now, one of the sectors that's really been hit lately has been healthcare, and a lot of that off the back of Donald Trump's comments on drug pricing and so forth. But today, the healthcare space is absolutely surging, and a lot of that is coming down to the rise in CSL. Talking of confession season, I suppose, CSL coming out with an unexpected profit upgrade. Those shares are soaring. I mean, this is a huge upgrade for a company that continues to deliver. What do you think it reflects? So obviously strength of the company, but what have you made of the upgrade?
Look, the upgrade for investors who have continued to hold the stock through, as you rightly point out, some fairly trying times and trying conditions, and a few grenades from Donald Trump which have affected the healthcare sector and the pharmaceutical sector overseas and indeed here in Australia. So they've waded through all of that, and then the company comes out this morning with this, what was really a monstrous profit upgrade from an expectation of 11% growth up to the 18 to 20% range. So it's almost a double upgrade. That's not my term. I'm coining it from, using it from someone who coined it earlier on the show this morning, but almost a double upgrade. And unsurprisingly, the share price has jumped 10%. So it's a great reward. For me, it reflects, really strong management from the company. There are externalities that sometimes can't be controlled, like currency headwinds or tailwinds for that matter. But it does seem to be a company that continues to deliver. And I think it was Evan Lucas from IG in a tweet this morning said that it's pretty much the best company that Australia has ever produced. I would not disagree with him on that front. It's a company that, like I said, it continues to deliver. You can believe in and trust that the management are going to do the right things to navigate pretty much anything that gets thrown at it, including Trump grenades.
Now, they are reporting their half-year results on February 15, I think. Is it reasonable to assume that the result will be strong? And if that is the case, is there further upside in the share price into and out of reporting season?
Great question, and that's the question that has been on my mind all morning. And I think, yes, first and foremost, I think the results in February can be strong, and perhaps even stronger than even what now people are expecting, taking into account the upgrade. Will there be further upside in the share price? Well, the best way that I can answer that is that I'm very, very seriously considering buying it this afternoon, depending on how it trades in towards the close. I don't think I need to say any more.
Okay. All right, excellent. We'll be watching that to see how it does sort of close. It's sitting at $109.26 at the moment for CSL, as you mentioned, up 10.2%. So really a stellar performance from CSL today. Let's just move on to Bega Cheese, and another strong performer. Shares are up 13.2% right now. It's bought a number of craft brands, including Vegemite, which instantly is EPS accretive. Bottom line, looks like it's been a really well-received acquisition for Bega Cheese.
Yeah, absolutely. And of course, that's reflected in the fact that the share price is, really strong out of the gates, up 13% today. It's a good news story. Obviously, Vegemite coming home to Australia, I think that puts a smile on everyone's face. But as you say, instantly accretive. Some really, really strong household brands that are incorporated, of course, as well as Vegemite. The revenue that the acquisition generates is about $310 million. And the profit expected after the first year is circa $40 to $45 million. So a great acquisition. I listened with very keen interest Barry Irvin, who was on the show, earlier, the executive chairman. An interesting thing that he said to me was that they hadn't really taken account in their analysis of the deal any synergies just yet. I think some natural synergies will flow. He did talk about the food manufacturing skill set and the marketing skill set between Bega and the brands that they've acquired being complementary. So I think there's perhaps even further upside on this deal. Now, will that be reflected in a stronger share price? Well, that's the million-dollar question. Perhaps not, given that we've already seen a huge 13% increase in the stock.
All right, fantastic. Chris, there's been so much to cover from this morning's news flow. Really do appreciate your time. Thank you so much.
Thanks, Leanne. Cheers.
Chris Conway joining us there live from the Australian Stock Report.